Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome to the show where we interview the nation's leading real estate entrepreneurs. It's your host, Stephen Schmidt. Welcome back if you're joining us for a second, third, or 100th time. And welcome if it's your first time. You're in for a major treat today. I've got James Mendelsohn in the studio with me. And we're going to get rocking and rolling talking about all things money today. James has a very colorful career, over 30 years in the financial space, coming from private equity and now focuses on lending. And so we're going to talk all things money for ideally operators that are somewhere in that $10 million range. So before we get started with that, just remember at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses to allow them to build the businesses they've always wanted, to allow them to live the lives they've always dreamed of. With that being said, James, welcome to the show.
Hey, great to be here. Thanks again for having me.
You bet. I'm excited to get into our conversation for today and talk about our topic. But before I do that, can you just give us a little bit of a background on really how you got to where you're at today? What got you started in the space, and how did you get to where you're at now?
Yeah, no, happy to. Started off as a statistical analyst working in credit. So spent a long time in consumer credit and mortgage. And then was one of the big consulting firms, and then spent a bunch of time in private equity, mostly focused on lending, and using credit data to build better lending models. Got out of private equity and started advising lenders on acquisition, M&A, some other pieces, and where they really needed help with raising capital. So started focusing on that, bringing more debt and equity capital to bear on the market. Worked pretty well. Had a little bit of a shift during the pandemic. Did a bunch of work with the PPP loans, and that really opened my eyes to all the different smaller companies and operators that needed better access to capital. So in 21, refocused my company to really try to deliver service to that segment and bring capital to those companies, and then in parallel discovered a ton of unmet needs in real estate, both for debt and equity capital. So started working with operators in the real estate space, and so we do direct lending up to about 10 million, and then above that, and in other situations, we work with a number of big partners. So whatever the situation is that comes to us, we can usually figure out a way to get the deal done.
Yeah. Now, so what types of investors do you primarily work with? Because I guess maybe I misunderstood when we were talking. You said up to 10 million. I was thinking somebody doing like 10 million a year. So like what types of investors do you primarily work with? Are most of them like fix and flippers, buy and hold, developers? What's kind of the typical mix you see?
It's really all over the map. I mean, we've been really fortunate in that a lot of our almost all our deal flow comes as just referrals, people that know me or one of my team. And they come in. So we've done, small sub 1 million deals to 250K fix and flip or a 500K bridge. We've done a 10 million portfolio refinance, or 5 million of rental property.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And then we've done bigger stuff, 50, 100 million, same things, portfolios, subdivision developments, land acquisitions. And for those, obviously, we work with bigger partners, people that have the balance sheet. But we'll work to source the capital, structure the deal, figure out how the economics make sense for everyone.
Yeah, for sure. Now, I know, you hear a lot about bridge loans, DSCR. I mean, we could go into all that. I think most of our listeners are pretty familiar, but is there any newer niche loan options you're seeing like really gain traction in the space other than like DSCR? Because I know that's still kind of taking a stride too.
Yeah, I mean, yes and no. I mean, I think we're finding some higher leverage options. I think that tracks with it's sort of that sweet spot of what's a good deal, and that can be size, geography, asset class, and the other dimension is that what's the good operator? Someone who's got either experience, a good team, there's no operational risk that the deal's not going to happen. And so when you can put those things together, we're able to get higher leverage, which I think is a really important variable, because it can be the difference for some, especially on the smaller side. Higher leverage can be the difference between doing a deal and not doing a deal. Sure. And if it's a good, we can, like I said, we usually try to figure out a way to get it done. But that's one of the things that we're seeing is with that intersection of the quality of the deal and the quality of the operator, we can bring more leverage to the table.
Sure. What's speaking of like the operator, like what's one financial structure you've seen recently that made you think like this operator really knows what they're doing?
I'm trying to think. Here's a big one. This is going to be probably all in over 100 million of capital deployed.
Wow.
Commercial property. The guy is not over levered, so he's coming to us for a combination of refi on an existing note, and then some development capital to do all of the entitlement and pre-development work, and then the next phase of doing the rest of the horizontal and vertical. So it's just he's got a very good methodical approach, very strong balance sheet, excellent know-how, and that's a down the fairway deal. You could do that all day long, right? Yeah. Smaller scale, similar guys doing it's a $2 million buyout, so smaller, right? But similar, like good operator, good track record. He is taking over a project from a guy who just wants out of it. And again, quality project, and I'm being like geographically agnostic, so it's not necessarily in a hot market, but it's a good project, so the economics make sense, and strong operator. So sure. That's been one where we've been able to come in and get that one done too.
Yeah. How do you recommend investors position their financials to appear more attractive to lenders?
I think, I'm trying to remember the old joke, like tell the bad part of the story early. Like there's nothing is a deal breaker as long as you know about it, right? I mean, we've been able to do financing for people that, have bankruptcy, have unprofitable deals, have an underwater balance sheet. Like none of that would stop me up front. But if I don't know about it up front, then if I find out about it, and it'll spike the deal.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Because the more you know up front, the better. So I wouldn't ever try to like whitewash or sanitize something. I would just like tell me everything, and not just me. Whoever's repping you or whoever's trying to source your capital will probably tell you the same thing. The more we know up front, the better it is. And sometimes, I mean, we had one guy. I mean, I felt bad for him because he had gotten himself into trouble and he was in receivership, and the best thing we could do with him was get him out of it, but that's a distressed sale. And we could still bring that to the table for him, right? But we knew everything up front.
Right. Are there common red flags that like instantly make you decline a loan request, or what does that look like?
I always hate saying no right away, but I think the combination of if you have like zero experience doing a deal and you have zero of your own money, like there's just no way to move forward.
Mm,
And so then my advice is usually like find a partner that knows what they're doing, and or figure out a way to raise even a tiny bit of your own money, friends and family or some kind of other asset. And if you've got collateral, I mean that works. Like you can put up if you own your residence or something like that, anything that works from a collateral standpoint. But that sort of like no experience, no capital is a real dead end. And they can be good projects. I mean, we had one where the guy had a great idea, and his background was in architecture. And I said, look, this is a great idea, but you aren't going to be able to pull this off. You just don't have the experience to do it. And it was a pretty big subdivision, right? So it's just
mm,
you've got to partner up with somebody who knows what they're doing, and you could. But we advised them like find that person, form a JV, and you can still be your vision, but now you have somebody else to be a partner who has the operating credibility, and that'll satisfy, a lender or an equity investor.
right. Because ultimately, like at the end of the day, when you're using other people's cash, they've got to have a solid bet that they're gonna get it back and some, right?
Yeah, I mean, this is the thing. Right? I always tell operators is look, it's a very simple equation, right? You want to take X dollars of somebody's money, you're going to do something with it, and you're going to return it to them with yield. And so it becomes a question of is that yield sufficient in the market, whether it's debt or equity? Those are different numbers, but different investors have different targets. So that's part one. Part two, what assurity do they have that you're going to deliver the goods, right? And that goes to your experience, quality of the deal. A good operator in a bad market is sometimes better than a bad operator in a good market. And then third
Right.
thing, everyone wants to know if the sky falls and the world comes to an end, what happens, right? So what kind of security, collateral, the doomsday scenario is never a good one, but it's one that we always have to look at.
Right. Yeah. How would you say, like, especially in the last few years, interest rates rising for the first time in a long time, all those
Yeah,
different types of things, right? How would you
yeah.
say the current lending environment has shifted in the past? Let's just be fair and go 36 months, especially for like value add or short term deals, or just specifically related to what you kind of focus on.
Yeah, I mean, my tongue-in-cheek answer is it takes twice as long to get half as much done, right?
Sure.
So I mean, part of the problem with rising rates, like so, a lot of people haven't been used to them. I mean, I've been around long enough that rates are now about what they were when I started in this business.
Yeah.
But if you're not used to high like a 7.5 prime, that can be eye-opening. And
Sure.
and what it also does is it lets people sit on the sidelines because you don't have to go after deal flow when you can make 7 to 10% doing almost nothing.
Right.
So it raises the bar for the quality of the deal and quality of the operator.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And I think we're always trying to make sure that we're, obviously good stewards of our own capital, that we are, represent good packages to the marketplace. One of the guys that was a mentor to me when I was starting out used to say that, the second worst thing that happens to you as a lender is you get paid back. And we're always
Right.
trying to make sure that, we always, like, you never want to lean into a marginal credit situation, because it's always gonna, just get everybody in trouble. Um, but I think rising rates have just really tightened scrutiny, on deal quality, on execution, because that sort of operator risk is not small. I mean, in some of these deals. So that's where, again, the guy who's done 20 or 30 fix and flips is going to have a lot easier time, than the guy who is starting out with his, this is his first or second.
Yeah.
And that's always a little bit of that, we were talking about this before the show, about that sort of paradox of, you can't you get a deal done without any experience, but you can't get any
Right.
experience if you can't get the deal done.
Yeah, for
So,
sure.
and rising rates hurt that, just very candidly. And I think we're
And
we're in this interest rate environment is not changing anytime soon. So we're
right.
gonna get used to it for a while.
So you expect rates, lending criteria to pretty much stay the same for a while, is what you're seeing.
Yeah, look, my crystal ball probably isn't better than anyone else's, but I mean, I don't think we're going to see like a 2%, prime or Fed rate anytime soon. I mean, I think we're in the high single digits for a while.
Mm.
Whatever the usable future is, 1, 2, 3 years. And I think credit criteria are going to stay pretty sticky. I don't think that I think there's enough good deal flow, that you don't have to go chasing marginal deals to fill the pipe. And that's part of our job, and we spend a lot of time educating people on what it means to go to the capital markets. What does it mean to go through our lending process? And we're pretty streamlined, but that doesn't mean we aren't buttoned up and we don't kind of look under the covers to figure out what's going on.
Right. So with all that being said, like things staying the same, how are you seeing investors adapt to tighter capital, still get deals done?
Well, so I think one, more syndication. So I
Mm.
think we've done blended capital stacks, where, instead of having one person write one check, we'll get four people, and we'll do LP structure on the equity and maybe syndicate the debt. So you've got, that sort of the capital sources are sort of, hedging the bet a little bit, and spreading out the risk.
Mm.
I think we've done more stage capital. So let's bring in a different style of investor for pre-entitlement or horizontal than someone who's going to do the vertical or the late stage.
Right.
I think we've done a little bit of, candidly, more dilutive valuation for the operator. So the capital investor gets a little bit better return, and there's, some downward pressure on promote. But all those things happen, and you can still get the deal done.
Yeah. Now, so let's maybe go in because I do want to talk. I know we mentioned a couple, talking points when we were talking before the show, but I want to ask like a few questions specifically, about like actual like products.
Oh
Um,
yeah, sure.
so like bridge loans, DSCR, et cetera. I mean, let's just start with bridge loans. Like, what exactly are they for somebody that might be a little bit newer, and like when should an investor consider using one?
Well, so I think if you, I mean, it classically, right? I mean, bridge financing gets you from point A to point B, right? So it's definitely going to be kind of a shorter term. So call it, 12, 18 months. And I think it's you've got into a property and you're on the way to getting out. But either you've got an anticipated sale or you're looking for, some sort of permanent long-term low rate financing. But uh, you've got to get out of what you have now in order to have that breathing room to get lock in either the permanent financing or lock in the sale. So that's
Sure.
what the bridge will do to get you there.
Sure. And so let me ask you this, because like one of the questions that like just naturally comes to me in that moment that I think other investors would have would be like, okay, well, with a bridge loan versus hard money, like when would be the best time to use hard money versus doing a bridge instead?
So I think, bridge can get you, I think, a little bit higher leverage than hard money.
Hmm.
But I think importantly, you're going to be at a later stage of completion
Right.
for bridge work. So hard money will get you through the flip or through the construction. But again, let's say you're done, but you haven't sold it out, and or you want to go through like let's say I don't know, you want to do a bank rate finance to get out of the hard money, but bridge can come in and be that instrument to get you from the hard money loan into a sale, right? Depending on how long you're gonna want to carry. So you could use that to reduce your debt service and still preserve some yield.
Right. How quickly can you typically close a bridge loan, and like what kind of documentation is usually required for that?
Yeah, I mean, I think I would say the fastest is probably 2 weeks. Average is probably four. And I think the documentation, I mean, it's going to come three categories, right? I mean, all the stuff about you as the operator, all the stuff about the property, and then all the stuff about the financing. So if we're taking out a hard money loan or we're taking out an existing mortgage, what is everything that we're dealing with? And then on the other side of the bridge, like what's the takeout of the bridge? So if you're saying, I want out of my construction financing because I'm going to sell this property, or I'm going to sell let's say it's a 4 unit building or whatever it is, what does that look like? Like, what's your plan to sell it? And then are we sure that proceeds are going to be sufficient to take out our bridge and give you some return?
Hmm.
And we got to handicap that a little bit too.
Sure.
But if we've got all that documentation, again, like what I was saying before, the more we have, the fewer questions we have to come back to and iterate, the faster the process goes.
Sure. Okay. And so, like, aside from bridge loans, like, what other loan products do you see commonly being used by investors specifically?
Yeah, I mean, look, I mean, we kind of we're a bit of a Swiss Army knife. We can do just
Yeah.
about anything. So yeah, we bridge, fix and flip, ground up, rental portfolio, rental acquisition, multifamily. I mean, depending on what the need is.
Sure.
But we're working all those different types of products depending on what people are bringing to the table.
Right. Let me ask you this, because I've never had a conversation with a lender that said they couldn't do something until they couldn't. Right. So, like, with you being, in a sea of people, um, like what makes you personally like really stand out from the rest of your competition? Obviously, rates are going to be the rates. The companies are going to be the companies. Like that is what it is, right? But like, what makes James Mendelsohn stand out?
Yeah, I mean, I think we one is our team is very creative.
Hmm.
And I think we will also hold a mirror up to the deal. I mean, you'll say lenders hate to say they can't do anything, and generically that is true.
Right.
But we look at deals all the time where we'll say we this is not a doable deal, right?
Sure.
Either you don't have the capital, or there's no such thing as 100% levered financing anymore. We get this one a lot. where people are like, oh, I want to buy this apartment building. Like, great. What's your equity capital position? Like, oh no, zero. I want 100% leverage. Like, sorry, we can't do that, right? That
Right.
for you, especially you're a novice investor and you don't want to pledge any equity capital, like, can't do it. I mean, we can do highly levered financing, but it has to be an operator with a very thick balance sheet and a really good track record. Um,
Right.
so but I think our creativity, and I think we've got very flexible products. I mean, look, we underwrite, and I think this is where a lot of lenders, you converge on a mean because everyone's underwriting to kind of that same model. Like we can't have losses in our book above guidance, but we're still going to try to get a deal done.
Right. Yeah, that makes a ton of sense. What's a big misconception that you just see most investors having when they come to you?
Um, I think the biggest one is they don't think that they matter as much as the property.
Mm,
And so, when I ask you for a PFS and a credit check, and people are sometimes surprised by that, right? Because they think the property should speak for itself. And I think
right.
especially when
What do
people are
you
thinking,
mean?
yeah, I've got a great deal, right? But that's the difference what I said before. Like sometimes if you're on your 30th flip, we that's a lot easier to get a deal done for you than the guy who's on his first one, right?
Right.
And so I think that's the most common thing I run into is people don't understand how much they matter to the lending equation,
Mm,
and both their expertise and but also their ability to
mm.
collateralize it. And not like, for example, not saying that you always have to PG, but I mean, if you're willing to, that actually makes your deal go further, faster.
Right. Yeah, that makes a ton of sense.
Yeah.
If you had to leave the audience with any last bit of advice, what would that be?
Um, get everything out early. I mean, the difference between 2 weeks in underwriting and 4 weeks in underwriting is really you, not me. Like if I
Mm,
find stuff that you didn't tell me about, it's just going to slow everything down. Like I would rather you spend a week getting all the documents together before we get started than give me half of it on day one and then make me go back to the well 5 times because it just chews up time, and especially if there's something that we're because look, ultimately we're going to find it, right?
right.
I mean, if the building's in receivership, like just tell us because it changes how we approach the deal. It doesn't kill nothing. Nothing is ever an automatic no, but the if we start down a path and we think, for example, this is a pretty typical, 30% levered loan with a strong balance sheet backer, and then we discover that, oh, it's 90%. That's not going to work, right? We have to know up front what we're doing, and that's how we're going to drive the deal flow.
Yeah, love that. If people want to learn more about you and what you're working on, where should they go for that?
Yeah, proximafinance.com. We'll get you the link, and people can give us a call, look at the site. We can get a deal ingested and done, hopefully within 2 4 weeks, depending on the structure. And always happy to chat with folks. Like I said, we spend a lot of time educating people on how our flow works and what products are available to them, and always happy to do that.
Awesome. Well, James, thanks for being here. One last official question for you, because I'm just more personally curious than anything. But what's next for you? Like what's really on the horizon that you're really working on? You're really excited about? Maybe it's even just
Yeah,
a passion project, not business. But what would that be?
oh, not business?
No, no, no. I'm saying maybe you can take it wherever you want. So
Well, I won't. I'll spare you and your audience me working on improving my golf game. We are we're gonna launch an equity fund. We're gonna put
mm,
together what like we're a balance sheet lender and that's been great. But we still work with third party capital for equity. But we're gonna put together our own equity fund and be more of a one stop shop.
that's awesome. Love that.
Yeah.
Sweet. Well, folks, go connect with him for more, and maybe you'll see him out on the golf course with me. I always tell people, when people ask what my hobbies are, I tell them hunting. And most people, naturally, if they're not completely turned off by the idea of hunting, they ask the follow-up question of, oh, what do you hunt? And then I go, golf balls, and they never expect that.
That's a good one.
You can just find me in the trees, so or the pond, one of the two. Well, James, thanks for being here. Everyone, I hope you enjoyed today's show, and looking forward to seeing y'all in the next episode. Thanks again, James.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.